There are three main types of trends that every investor should be aware of: uptrends, downtrends, and consolidations. Uptrends are characterized by a stock's price making higher highs and higher lows, indicating a positive trajectory. This is the ideal time to buy a stock or go long, as the price is likely to continue rising. It is important to avoid buying at the high point, instead waiting for a temporary dip to purchase at a lower price. Look for key support levels, such as moving averages, to guide your buying decisions. Conversely, downtrends involve lower highs and lower lows, signaling a downward trend. This is not the time to buy, as the price is expected to continue falling. Selling or going short when the price rallies temporarily is the best strategy. Again, avoid buying at the peak and wait for resistance levels to sell. Consolidations occur when a stock's price is stagnant within a trading range. It is wise to observe and wait for a breakout before making any moves. If the price breaks above resistance or below support levels, consider buying or selling accordingly. Remember, trends can vary in duration, from long-term to short-term. As a short-term trader, focus on stocks that exhibit all three trends simultaneously for the best chance of success in the market.